Well, welcome. In this video, what we'll do is we'll look at today's trading day and we'll see what are the high probability trades that occurred using the RexDog Trading System. If you're in the membership, if you're in the training, this will be a recap, obviously, to how to use the system. One of the things that spurred me to do this is that I've had a lot of discussions about what size account should you have, maybe if you're trading futures or even Bitcoin or even Forex. What size account do you need, and how should you trade accordingly? For people with smaller accounts, one of the things that you really have to get good at is entries. And you have to get good at really picking those high probability areas of entries because you really can't make mistakes. It's a grind when you have a small account, and I'm talking, I wouldn't say as low as $500, but let's say you had something as low as $1,000. You can grind it out, but it's a grind, and you really got to pick your spots. And I've said this in Discord, but I'll say it here. If you're starting with a small account, and for instance, let's say you're in the membership and you're trading my system, you should be able to trade for 3 weeks. Let's say you're starting with $1,000. You should be able to trade in a demo account for 3 weeks and have 3 weeks of profitable days, meaning that every single trading day it should be profitable. Until you have that, then you really shouldn't jump into live capital. If you do jump into live capital, you're only taking high probability trades like the one I'll share here today. So we're going to go into the MNQ. We're going to look at that. We're going to look at a Forex trade, and then we're going to look at Bitcoin. So we're going to look at today's action. So first up, let's just talk about on the open. So what we have here, I'm not going to go into detail of these charts. This is mainly made for people in my Discord and the membership, but let's just jump in. So I'm not going to explain everything here. I'll explain things kind of as we go forward. And if you want more information, join Discord, ask questions. There's other videos on here. If you want the full answer, definitely join my membership. You'll find information to that down below. So the first thing is on the open. We're looking at the 5-minute chart here. On the open, I don't trade the first 5 minutes in the open. I do look for a snapback trade, and that snapback trade is where price is above or below the previous close, and it's going to snap back. That did exist here, and that's kind of what happened on the open, but it wasn't, given where the overnight indicators were aligning, the momentum indicators, just wasn't a strong trade. Your first real trade of the day happened in this green bar, and it would have been a hard trade to take, but if you were reading the chart correctly, especially the tick chart, you would have took this trade. Now you're most likely not going to, you might look at this level here. So if we go here and we draw a level here, you would already saw that level pre-market. So as the market opened, you'd see it come down here and holding that level. Maybe you're thinking, okay, is that going to be the low for the opening range? Is that going to be the low for the day? And of course, you're going to take into account the overnight action and everything that happened here. But we're just going to go off right away. You see a low come in, and you see this low not only is tested, but it falls short. So that's your first clue that, okay, maybe it's trying to head up. Your first area that you would be looking for is obviously the momentum indicators. So that's your first area, which is here. That's your first area, which is right here. That's your first area of, okay, this is the room. So if you would have, and this is right around 840, if you would have went long here, that's an okay trade. You're probably not going to go heavy though, because it's early in the day. You don't know, you don't have any clue that this bar is going to be this expansive here. Now, if we look at the actual tick charts, and let me pause the video. I have to move the other tick charts too. Okay, so if we go over to the tick charts, this is where the high probability trades comes in, which is on this candle. Your high probability trade, you're looking for it. Number one, when you see, here's another level. This is something you should see. You have on this tick chart right here, you have another level. Let me draw this. You have a level right here. I don't know why that's, there it is. You have a level right here. That should be very clear to you. It should be very obvious. You see that it aligns with this level here, this 5-minute close. So you know that level exists there. So you see that. What do we also see on the tick chart? This is a pattern that if you're in the den, if you're in the Discord, I've talked about this pattern many times. This pattern that you see here, this exact pattern, I talk about it a lot. That's a pattern you're looking for. That's a pattern that you're looking for a bottom or a top. Obviously, it's inverted if it's on a top. You're looking for that pattern. So that pattern shows up. When you see that pattern, then what are you looking for? You're looking for the momentum indicators to be recaptured, which they were here. Right here, they were recaptured. I don't like these. I don't like the drawing tools on this platform. You could see here they were recaptured right here in this area right here. That most likely is not your high probability trade. You might take a position there with the expectation. That's not a high probability trade. That's a trade I would take being aggressive. Actually, I'd probably take this trade down here once this level held. So I would be taking this trade here as an aggressive trader. I didn't take that trade. The trade I took was as soon as it crossed and captured the momentum indicators, I took this trade right here. And then what did I do? This is your confirmation right here. This confirmation, especially when you see this pattern. So number one, pattern, we have a low. It didn't reach the low. We see this pattern here. And then what happens? We have a level here. It comes back, tests the momentum indicators. What happened here as well? What also happened here? If we look and say here, what happened here? You should be saying that it went from a momentum short to indecisive to a momentum long environment. So now it's momentum long. So this is your first, this is the high probability trade right here, entering right here. Because where do you put your stop? Your stop is really close. It doesn't have to be much more than 8 to 10 ticks. If it closes below the momentum indicators here, you're either early on this move here, so maybe you should just watch it and maybe get back in if you were stopped out, or it did what it did here, which is it never broke the momentum indicators. And see, it just continued up. Now this is where it gets a little, this is a pretty decent trade, because this trade, you would have rode this trade all the way up here, because we don't know what the upper end of the opening range is yet. So we don't have a clue about that yet. So, but as you come here, where's your first clue that the long momentum is probably starting to stall? Well, your first clue is here. This is your first clue. That's one of your first clues here, is that this is the long momentum is starting to stall, which is right here in this area here. The next clue should be, I don't know why it does this. So you have to put up with me frustrated with this stupid platform here as far as drawing. It's great trading. It's just terrible drawing. So that's your first clue. Your next clue is here. That's your next clue. So you would think, okay, well, yeah, it's going to, because it hasn't, you'll see here, it went on a heavy momentum move, and then it did sell off here. Now, if we look at the 5-minute here, we see that it comes back, and it tests the momentum indicators. It never gets to the RDA. It comes up here. So you might have, if you were trading this correctly, you would have had third positions. So let's say you just did 3. You just did 3. So you entered here. You would be holding this. You'd probably be a little concerned on this retest, but you would have held it because your stop loss is down here. As soon as it started to do this move, you'd probably move your stop loss up here. And then as soon as it kind of trailed back here and did this little move here, maybe in this range, you probably are taking your first profit. You're taking some off. And then you're moving your stop losses up. The next thing that you're doing is that as it comes here, it never really breaks upward momentum. It's still momentum long, except for here. Here's your second clue. Here's your second clue on the tick chart where it broke momentum. And that's probably where you're going to get out. Right there was when you're going to get out. And this is where, you know, where you're at in the time frame of the day too, is look, you're about to hit the first half hour of trading. You're saying, okay, this is the opening range high so far. This is the opening range low. What you're really thinking about is, what if this is the high for the day? And what if this is the low for the day? What does that mean for my trading? So that's really what you're strategizing out. Now, as we go across here and we look at the big tick, we can see here at this point in time, this did switch over to momentum long, but it's still a little choppy here in this whole time. It's still a little choppy. And a lot of that is due to the size of these actual bars. I mean, that's a big move here. That's a big move here. And that's a big move here. And that's a big move here. So as you're going into this time, you're thinking, okay, is this the high for the day? So you have a level. The first thing you should be looking at here is when this 5-minute bar finishes and completes, you have a level. You have a level that's been created. So all you have to do is just visualize or see that level, and then see that level here. That level started at, let's say, 850. That's when we would have had the official level. So right here. So this is our level. We see here, here's the first clue that the momentum is shift. You can see on the momentum indicators, the momentum shifted right here. At this point in time, it went momentum short. It's still, bias is still long because we're above the RDA, but it's momentum short. It's telling you that, hey, there might be a switch over here. There might be a switch over. You have a level. So now you have a level correlated to the 5-minute chart. You see a test above that level here. The second that fails, that is probably a sign that, hey, I can probably use this level here as my stop loss, because it should not close. Once this bar on the tick chart printed, it should not close above this actual level here. And it should not close above this high, which this high is short of these highs. So you'll see this here. This high is here, which is here. It's short of these highs. So really, if you take a position, your position is short here in anticipation that it's going to roll over. And where's that rollover? Well, if you look at the 5-minute chart here, remember this is your correlating back. Where are we at on the 5-minute chart? On the 5-minute chart, and I know for those that are not accustomed to actually trading the system or looking at the system, this is going by fast, but like I said, this is really for people in my membership. So as it comes down, where are we at up here? Up here on this test, we have room for the 5-minute momentum indicators. We have room for a test. And that's and it is messy here. You can see here, it is messy. If we were on a trading view chart, let me jump over to that. So if we look at a trading view chart, it's this, and these opening ranges are not accurate. I don't know why they're not accurate. So if we were to look at this candle right here, is the same candle, that 855 candle here. So this would be that high. You can see here, at this point, you do have a little bit of room. You have roughly 36 or so between here and the momentum indicators, which it did held up. We do see there is a reaction there. There's a reaction, and then there's a reaction, then it went up. Ultimately, it failed. But if we go back to this chart here, we can see that unfolding here. And we see that what happens is that you would have shorted here, and you would have had a target down to here. So that would have been a quick trade. Remember, these are intraday trades. You probably would have considered maybe going long here, because what is this also? Because you're also looking at 50% of this actual candle. So if we go over to these charts here, and you take 50% of this candle here, this green candle, where did that stop? I know it's hard to see. It stopped pretty damn close to the 50%, which aligns with the momentum indicators. So we go back here. That would have been your first thesis. You would have thought, okay, well, that's the room that I have in this trade. So you would have said, okay, this is probably time to get out, trail your stops. Depending on where you entered, you probably would have got out here. Now, as it came back and it closed short of this open here, you'll see that the next candle came up, and we have another level there. It's just a level of an open right here on this 5-minute candle. And what did it do? It barely just pierced the open there, which is here. And then what happened right here? Let me go back and get my circle. What happened right here? You should say that it recaptured the momentum indicators and it went momentum short. So this right here is a prime example of another high probability trade. the second that it closed here, you should have went short. And short with your stop loss could be above this high of this tick right here. That could be your stop loss right there. Your better stop loss would be up here to give it a little bit of room to spike. But the aggressive stop loss would be just above this high on this tick here. The second that it closed here, came back down, you had another opportunity. You might not have got picked up to add here, but then you had a opportunity to add to the trade or to get in the trade right here. That was your opportunity right here. That checks all the marks. We got it's the bias is short, momentum short, everything short. So there should be no reason why you shouldn't have took a short there. Or you should have added to your trade. And that's exactly what I did on this trade. I did short it, added it here, and then I didn't get out of this trade until here. Right here. So I think I might have took a little bit off here because when I see this, when it stalls and comes back, I wait for one test. So I usually stay in for one test and then another follow through, which is exactly what happened here. So I wait for one test. It came up and test here, the white line. Got close anyways. And then I wait for this low to be broke, which gives me another level. This is all stuff you should be doing in real time. Gives me another level. So I have another level to watch now. I have another level right here to watch now. And then obviously we have these lows. And then that's here on this chart where this sell-off happened is right here. This bottom. So what did that do though? That took out, what do we have here? That took out the previous low. So now what are we thinking? At this point in time, it's 9:10 in the morning. It's 40 minutes into the trading session. What are we thinking? Well, we're thinking, okay, was that the high for the day? We took out the low. So is this the low for the day? In the opening range, the first hour, you're looking for the high probability that the low or the high for the day has typically been made. A little bit, when things are happening geopolitically like now, that's not as reliable because things can whipsaw just given there could be some kind of event or something just happen just because of the nature of the news and what's going on in the world. But these are still guidelines and rules that you should trade against or trade with. So that's what you should be thinking. Remember what you're doing in trading, and my system specifically. My system has these indicators that you trade with day in and day out, and you learn how to trade around these indicators. They reverse engineer momentum. So you're trading usually with momentum or you're fading the move. But the other thing that you're also doing in my system that I teach you in my training, and if you haven't absorbed this and you're in my membership, I want you to hear this, okay? The other thing so my training has the technical analysis, the tools, how to read that, how to read price action around them, and it tells you the technical side. The other side that my training really covers and does a deep dive into is how to stay out of tunnel vision. Because what you're doing consistently throughout the day is especially if you're in trades. If you're in trades, you're in an emotional state. And what you're trying to do is always ensure that you're seeing the micro and the macro, meaning the bigger and the smaller. You're always doing that. And how you're doing that is, number one, you're trading the RexDog system. You have the indicators in front of you. You know how to trade around them. You know the rules to trade with them. But the other thing that you're doing is various times of the day, typically at key times like the closing of the opening range, the closing of an hour, or a certain level being hit or something happening in price action, what you're doing is you're taking a step back. And you're taking yourself out of the tunnel vision, and you're using the questions and the things that I've taught you in the training to then see the bigger picture. That's kind of how to look at what I stress in my training is there's the technical side and then there's how to get out of the tunnel vision. And this is how to get out of the tunnel vision. So how you get out of the tunnel vision is that we're about to end. We're in the 9 o'clock. The 9 o'clock hour has hit, which is the first half hour. So I'm Central Standard Time. So that's what these are. So the first half hour of trading is over. And you're thinking, okay, has the high for the day been hit? Has the low for the day? Well, we took out the low, okay? And I could add a bunch of stuff in here about the 1 hour. I should, but I just don't want to go down that rabbit hole. But if we just take it on what levels do we have? What levels have we established? Well, we've established actually a level here in the 5 minute. So if we look at the 5 minute, we go on a little bit more. That's a close level. You can see this here. There's a level right there on the 5 minute. And then we have lows. So once this bottoming quote unquote pattern has been put in, what are we looking for in the tick charts? Well, hopefully you set a pattern. And that's true. And this is I really like this trade here because I took this trade and this is an example of, and I'll go through this full what occurred here and how to keep yourself out of tunnel vision, but also how to understand what's happening. So the other thing is that I mentioned this already is that there's a lot of news going on. We're in the middle of conflict and it's easy to be sucked in with that news. What you need to understand is that that's the environment that we're in. So you need to understand what is the typical trader or the trading world or market looking at. And you need to understand that. But then you also need to almost immediately forget it and be open to any possibility. And I know that's hard, but that means even because the news is dire and it might sound like we're on the edge of destruction, you need to be open to that we're not on the edge of destruction. And you need to be open to taking trades that show that we're not on the edge of destruction. So for instance, going long here on this area was an example of not being sucked into, okay, we're going to sell off anytime. We're going to sell off at any time. You should just be open to all moves and just trade the price action. Trade the system. That's really what I'd say. You've learned my system. Number one, you've learned my system. The next step is you make it your own, and then you trade your own system adopted from mine based on your own conviction. That's the key. Now this is a good example because this is where trading is messy. So the second that this 5 minute candle closed right here, this one right here, which is right, what time is that? That's 9:15, right around here. So you've got a level here that we can mark up. We've got a level on the 5 minutes, and we've got a level here on the lows. So the second that these candles closed. Now I'll do another video on this, which will be more of a structured video about lows and why they're one of the most interesting parts of the chart and why really that's where you should be looking in the chart and what happens below there. But for this example, I want to show right where we're at right here is a frustrating time for traders. And this is where you have to be able to not get offended if you get knocked out of a trade. Know when maybe you're in a indecisive area. Also understand the environment that you're in. So when I say that, let's put context to it. Big sell-off. That's this big sell-off here. It's hard for people to change their directional bias when they have a big sell-off like this. And then you have kind of a smaller response to that. So you have a big sell-off and then you have a smaller response. And then you have what looks like could be bottoming behavior. Now, one thing you need to get good at if you want to trade both sides of the market intraday, meaning you want to go long, you want to go short, you want to go long, you want to go short, like I do, an intraday trader and always in trader, you need to get good at understanding the amount of time it takes for things to bottom, and you need to trust your system and trust your levels. So here, this was a 15-minute time frame or so right here, where you didn't have, the system was telling you that, okay, your momentum short. So what's the right trade when it got up here? Like right here. The right trade is to go short. That's the right trade when it got here. So that was the right trade here, is to go short. But what do we also see with these other, if you're watching how price action is unfolding, what do you see? Well, you see this level here has held up. It was here. You see that there's a switch over, a switch over, a switch over, a switch over. I'm talking about the momentum indicators. A switch over. Oh, it looks like it might be long. So maybe you would go long here. But your right mode, but your right biased is to actually go short for a continuation on the way down. Now, what do you have on the inverse of that? Or what do you have that's telling you not to go short here? Well, you've got on the 5-minute, you've got the momentum indicators. And if we go here, so we're going to go, and I know I'm bouncing around, but once again, I don't know how to nicely say this. I'm doing this for people that are adept at my system. So for new people, I do feel a little bad because this is going quick. But you can watch this video multiple times. So here, if you go short here, what are you saying? Well, most likely what you're saying is that it's going to test this level down here. That's the obvious point. It might try to take out this low. That's what you're saying. So if you're going to short it right here, you're saying that it's not going to test the momentum indicators because it is momentum short here. This is a strong move. This move will continue. And there's nothing wrong with that too. I mean, that's the right way to look at it at this point in time. Except for the counter signals that you're getting on the tick charts. This is why I say reading the tick charts is like a superpower. Because the counter signals that you're getting on the tick charts is, especially if you look at the big tick here, I'm going to say that wrong one of these days. You can see that, number one, this is a sign that, okay, maybe I should just wait to see if this is a true bottom. And if it wants to retest the indicators, the momentum indicators on the 5-minute, and then I short from there. Or maybe I just kind of stay out until it figures out what it wants to do. That's really usually the right answer. Now, you did have a short trade, which is an overshoot here. Where's my circle? So you should be prepared for a area like this where it overshoots the momentum indicators. It stays above there, then it comes back down and goes back to what you think might be the target, which was down below. When we mentioned that the target was, what we reasoned on the other chart was that the target was this level potentially. That's what it would be going for. At a minimum, you would think that maybe if it wants to come short, it would maybe come to here. That would be your targets. That's where you would expect your targets to be if it was to continue down. But that's not what the tick chart is showing you. The tick chart isn't showing you that. The tick chart is showing you, and you can see here on this candle here, this indecisive candle, it comes up and it does test the actual momentum indicator right here. So that would have been a good place to short. You would have short this and where would you put your stop loss? Now, I will say that this isn't a high probability trade. You don't have a high probability trade until another minute or so. So this isn't a high probability trade because it's a good trade, because where you can enter is you can enter not a fade. It's a momentum short trade on the 5-minute. But the indicators on the small tick are showing you that it's a fade trade. But on the big tick, it's showing you that, okay, this is a momentum short. See on the big tick right here, where we're at right here? So right here, in this area here, that's showing you that it's short. And that would have been a pretty decent intraday trade. You're going from 14.013 to the 954 handle. That's a pretty big trade. Now, you wouldn't have got confirmation to get out of that trade until maybe right here, which is 983, the 983 handle. So but that would have been how to play that trade. Where your stop loss would have been here is just above the momentum indicator. It shouldn't close above this momentum indicator to take that short. So that would have been a good trade. Now, here's where I get to where using what I've already discussed, levels and the lows, and making sure that your head is not in tunnel vision, really pays off. Because then you see stuff like this. So I want to give context. So here, it comes down, and what do we have here? Let me take this out. I thought I deleted that. Sorry why I fumbled with this. Okay. So what do we have here? We have a level on the 5 minute here that was created that did hold up here on this following candle. And then we have the lows here. We have the lows right here. And this is something that as you get adept at trading the system and as you get adept at watching the tick charts and trading accordingly, you can have some really nice trades. Remember, you're open to anything. You are momentum short. But one thing that I mentioned before is that you have a level here, and then you have a level here. So you have a level from the open and close, and then you have a level from the lows. I'm reiterating this because this is an important point. And here's the levels on the tick chart. So as it sold off, it went and breached those lows. And it stayed there for a little bit. It stayed there from 927.08, the seconds, not really a little bit, to 928. So it stayed there for about a minute. It stayed down here for about a minute. But then what did it do? It made a big move that recaptured the actual momentum indicators. It recaptured the momentum indicators. Now, what it did there is then it didn't just recapture the momentum indicators. It also recaptured both of these levels. So this is where trading is messy. But when you see something like this, you really have two options here. You could have shorted this here the second that it popped this level, and that we do see a reaction here. But you should respect large moves or larger moves relative to recent moves. What I mean by that is small move, small move, small move, small move, small move. See the candle size? Large candle, larger candle. Maybe something has changed, especially since these larger candles came here and recaptured the momentum indicators. Okay, so I could short that because it is momentum short. But if you look on the 5 minute chart, shorting that here, which is right here, it could sell off from there, but it's a hit or miss. I mean, at a minimum, where would you put your stop loss if you're shorting it? You'd put your stop loss above this high on the 5 minute candle, which would be above this level right here, which would be right here. But you should take into account that it tried to go below these lows and it found, not immediate, but it found quick buyer support. The second that you shouldn't be shorting anymore, and the second that you should either sit on the sidelines or go in the opposite direction, was right around here. And I'll get another circle out. And I hope this is helping. I hope this isn't, I'm going into a little bit more detail than I anticipated. Is right here. The second that the momentum indicators start to shift, this is your opportunity to go long. And I mentioned this in Discord too, mainly because exactly what occurred is that we have a level that held up, we have a low, it breached the low, and then it came back with bigger candle sizes, and then the momentum indicator started holding up. And then what happened from there? This whole move, it traded well above the momentum indicator, all the way up here. Where's your first clue to get out? Well, where's your target here? First up, if you go long here, where's your target? Well, your first target is all these momentum indicators here on the 5 minute. But one thing you should realize that oftentimes if the market isn't respecting those, like on the 5 minute, well, you should be a little suspect to them and say, okay, well, maybe there's some kind of news going on, maybe some kind of volatility. So while that is my first target area where I'd be looking for profit, when you revert back to the tick charts, there is no point in time here where it broke momentum except here, which is right here. Now, once it put in this big candle, and I said this on Discord, I said it's going to take out it's going for the opening range high. That's where it's going for. And what do we have here too? And this is hard to see here. But there's a 50% line here of here's the opening range high, here's the opening range low, and the 50% line is, let me make that bigger here. So I made that bigger. So this thick, whatever, brown line, kind of a Dwight Schrute shirt color line, is 50%. So that factors in. You also have 50% of this big candle here, which kind of aligns with this 50% area right here. So when this big candle hit, number one, I was long. What am I looking for? Well, this first area here, I took profit right at this level of this candle. So I took profit here. I took some off here, which is this area here, right where it's stalled. But then I'm watching, okay, the 50% level of the opening range and the 50% level of this candle. Simple, easy rules. What also aligns there? The momentum indicators. And what am I thinking? Well, maybe the 5 minutes going to start respecting the momentum indicators a little bit more. Not really. Didn't really. But the 50% held up, at least there. Now, this is where, if we look and see here, as long as the 50% held up, then the thesis that it was going to take out the high, for me, still held. That thesis. The second that it closed, or it started closing below it here, is where that thesis is, okay, the 50% is going to break, so I have this level right here of this candle here, which is my level that I'm watching for, to hold up. But I'm momentum long now, though. That's the one thing I want to mention. And the one reason for that is because the big tick chart has turned momentum long. So the big tick chart now is solidly momentum long. And if you look at here, the rest of the day, there was no point in time for the rest of the day. You should have really been short unless you were fading the highs. Because here on once after 10:01, after this move here, where's 10:01? So we haven't got there yet. So we're actually right here. Sorry, I apologize. So here, right here, after this move here at 10:01, there's no point that you should have been short. But all through this time here, you're thinking two things. Number one, is it going to take out the high or is it going to take out the low? The more that the 50% mark holds up, and the more that the price action from this candle, which is a direct response answer, you could say, to this candle. You could say this candle here, and then this candle was a sell-off, obviously, and then this was a response to this candle right here. But the more that 50% or this candle holds up, especially the open, the higher probability that it wants to remain momentum long. And so there's a little bit of a messy trade here. So I mentioned this area because this isn't high probability trade areas here. All in this area, it's not high probability trade areas. You didn't get another high probability trade. You got some trades here and there, but your next high probability trade happened again, which we have kind of a light pattern right here. Where are we at? This is 10 o'clock. So here we go. So we have a light pattern right here, a bottoming pattern. But what also happens? Recaptures the momentum indicators. What also did it do? It recaptured the 50% mark. The second that it closed above the 50% mark, this is a little bit of a tricky trade because where you at, you typically don't want to go long right at a momentum check here. So I can understand why you would maybe want to wait for maybe a recheck here, which is right here. So if you didn't enter right there, this chart really annoys me. So if you didn't enter early there, then here is your next entry area right here, which is 14,070 on this pullback here. Because you've got a solid change in momentum, your bias is long, and the momentum indicators. Now you didn't get any signs to get out really, if you're using the RDA especially, until right around here. And that's 10:21 in the morning. So right here is where you got your first time where you probably should have got out and think about, okay, is the market going to reverse? Now, the other thing I didn't mention on here that played a factor into these decisions, and I apologize for not mentioning this ahead of time, is the previous day's opening range. And why are they not showing it here? There it is. Okay. So, the other thing, the second, and we're into this time frame now here, which is, okay, it took out, what did it do? It took out the opening range high right here. What also happened here on this candle? It changed the momentum indicators on the 5-minute to momentum long. It's solidly momentum long now. The big tick chart is momentum long. So this candle here, once you're above the opening range, you should be obviously looking for shortable opportunities, maybe fade trades. But the other thing that you should be open to is that maybe it's just going to be a strong momentum day, and I should trade with momentum, obviously. As far as upside targets, I mentioned this in Discord. My first upside target was 50% of the previous day's opening range. That's where it stalled. Where's my final upside target? The opening range high of the previous day. And it did get there. We can see it got there, and it sold off from there into the close, or right after the close. So once it breached this, not only was I looking at opening ranges, I was looking at levels too. I mean, you can see that this level here, this aligns with a level here, the opening range, 50% of the previous day. And obviously the high does here. So when this is another high probability trade area, this is a hard trade for some people to do because, well, number one, it's going into the it's going into the lunch session, so you shouldn't expect much, but you're buying at the highs. A lot of people have challenges buying at the highs. They want to sell at the highs, which I understand. Sometimes it's a good strategy. But your first target here is the previous day opening range low, and then the opening range 50%. That's your high probability area, especially when it aligns with other things on the chart. Like you can see here on the 1 hour chart, it aligns with a 1 hour level. And if I draw that out here, there's a 1 hour level here, which is very clear, aligns with the 50% of the opening range. So that alone right here, this level here, that alone is just, that's a high probability reaction area. So when you say, okay, I'm going to go long here, the tick chart tells me to go long here. I have room up to here. That's really my first profit target. And maybe I reverse and maybe I go short. What's my room for my short? Well, if I'm going to short here, I'm going to think that there's maybe a test down to at least the momentum indicators on the 5-minute, which there was, or at least the opening range high to retest that high. It didn't quite get there. Where did you get your confirmation on that? You got your confirmation right here, early confirmation for the momentum change, but you're still biased long. And then here you got a high probability trade at 1040. And that high probability trade was from the 185 handle, and it was just choppy. So it wouldn't have been a great fade trade. You would have had to take profit quickly. And if you waited till the momentum really shifted, most likely you would have got out at least for 169. So not a big trade, but on fade trades, what do we know? On fade trades, you're taking profit quickly. And if you're in a momentum day where you're above an opening range and it's starting to respect the momentum indicators, and it's on the big tick, you're above its momentum long, you can fade, but you got to take profits quick. You can't expect big wins on fades when things have switched over. So that's really that is the best trades from the day. There is another one here, and I'll just cover. And this is just straight up tick chart reading. We could go to the 5-minute as well. What do we see here? You should see immediately, hey, there's a pattern. Hey, that's the pattern that you've shown in the training. That's the pattern that you talk about. There's the pattern right here. So this is a pattern. especially when you see, if you're using the red lines like I am here, well, comes out, breaches the red lines, comes up, stays within the red lines, recaptures the momentum indicators. That is at 11:57. Another opportunity to go long with confirmation. Very clear point where you put your stop loss. You put your stop loss below this low. Very clear area. So if we go, I just want to look at the rest of the day, see if anything really points out. I'm not going to cover that. Let's go to another market. So Euro JPY. I really didn't want to spend that much time on that, but there was one trade here on the Euro JPY. There's really two trades. So here's the open right here. Where's the open? So the open is the cash open for the cash market. So there's the open here, right around here. And kind of indecisive. We can see here, this probably isn't a clear setup here. But where your first trade is right here. Your first trade is right here. Your stop loss is right here. Your target, well, your first area of target would have been here. That's your first 25 pips. Your next area target, as you go back and look, I'm just using the 5-minute chart. Why did it stop there? That'd be the question. Well, using simple support and resistance, you have a bottom here. That's probably where it stopped. I didn't take this trade, but I did take this short. And I took the long, and I'll show you what I mean. So, I mean, that stopped right at that. That's common. I mean, when you see support and resistance, let me go to the 15-minute chart here. Very clear lows there. You know, old support becomes resistance. Okay, well, there's a near perfect example of it right there. So I didn't short there. I shorted, once this candle closed, I started shorting, and my expectation was it was going to come down and break the RDA and go back short. That's not what ended up happening. The second that this happened, though, that it had two, so I shorted this from here. I shorted right on the close, and I was going to scale in all the way up to here. So I was planning to scale in as it was going up. I was going to scale in every 5 pips. That was my plan. Just didn't have that opportunity. My room for this trade was here. That was my room for this trade. It was right around 25 pips. I was thinking just actual quick scalp, and I did that, and then I trailed the rest of the position, and then when it came to the right around 11:30, when it came to the RDA, and then it held the RDA pretty much 3 touches, 1, 2, 3. I got out and I went long. Where did I put my stop loss? Real simple. You should guess right below the RDA. I think I went long right here. And then put my stop loss right there. Where's my target? My target was right here. Just below this level. That was my target. I believe I'm still in this trade too, because and that's a 41 pip move. Took profit there. And then I think I moved my stop loss just right here below the first deviation band of the RDA. It's probably going to take me out, so I probably should just get out. But I'll give it a chance to find support at the RDA. So, for instance, that means I would have 15 pips pretty much left in this trade. But I've already took profit. So that's an example from a Forex pair. If we look at Bitcoin, Bitcoin was a hard one to trade because 8:30, here's the open. You would have had to got onto it right here and quote unquote chase the trade. One thing that you would have probably thought about is that where's your target? Your target is that 45,000 area, big round number. This would have been probably a good short area too. given where we're at in the chart. But there's no real strong high probability trades on Bitcoin, except for there's only one high probability trade here. All of this is noise. All of this is with one standard deviation. If you would have faded this trade, that's the only trade, and probably the fade would have been the second that it broke 45,000. Is that you were either fading that move right here, or you wait for it to come back below 45,000. This is a fade trade because you're so far from the momentum indicators, and your stop loss is above that high. I mean, you're going to give it more room in real time if you can watch the trade, but this was a relatively quick trade. Where is your first target? Your first target's here. That's a high probability trade, about 400. And if you're trading, Bitcoin futures, that's a decent trade. Your next trade, and this is where you have to trust the system, trade the system. You've got a level here, very clear level. And then you've got a change in momentum right here. Here's the change in momentum, change in bias. And you're shorting right there. Stops right there. Where's your target? Target is this level. Came up short. The second that it came up short twice is probably where you should have took some profit. So that would have been a good futures move. I mean, if you're shorting Bitcoin futures, it's a good futures move. If you didn't get out here, right here, where it came short of this level, so you want to always ask, why did it stop here? It stopped here. Well, it stopped 50% of this area here. So, okay, that fits the system. That fits the model. That fits one of the reaction areas that I talk about in the membership training. So, okay, I probably should take some off. The second that this candle printed, right here, that candle here, you probably should have got out. Why? It recaptured the short-term momentum. It's about to recapture this momentum. Now, it might continue back down. So at a minimum, what you should have done is, if you shorted here, is that you should have took some off right here if you didn't take it off here. When you see something like this where it hits this, it looks like a bottoming behavior, and then you have a strong reaction. Well, even before that, you should say, well, why didn't it reach the area? Why didn't it reach the most obvious area, which is this level? Why didn't it reach that? There might be various other time frames or whatever else in mind. You are at kind of the RexDog standard deviation area, so you should be thinking about that. If I had the VWAP chart on here, I can almost guarantee that's a VWAP level. I can almost guarantee this is a VWAP level. In fact, let's go to that. All right, if we look at this, this is that time right here, which does align. What do you know? See that? The bottom chart. It's a VWAP level. So your first target on this short was here. That's your first target. And when it doesn't hit that target, when it stalls, you're like, okay, well, why is it stalling? Well, if you've been through the training, and this is training that I just added, which is this second chart that I call the second chart, which is using the VWAP and the multi-time frame RexDog average indicators. Well, what does that align with as well? Up here, it aligns with the 30-minute RexDog average. It's close to the 30-minute RexDog average. The other thing that it aligns with is a standard deviation of the VWAP. So the second that held up and then it crossed above, should have took some profit if you didn't already, because it didn't reach your target. Okay, well, it's finding for some reason a bottom. You could wait till it completely changes momentum. What I mean by that is you could wait here until it completely recaptures. Well, right here is where it recaptures the momentum. Right here. Here, if you look closely, is where it actually recaptured the short-term momentum. This is where it recaptured bias, I should say. And then this is where it recaptured momentum. So sorry I mixed that up. So it recaptured momentum right here, and then it recaptured bias right here. But you got early clues. Why? We go to the next chart. Your early clues here is that, number one, that deviation range held up, and then it comes and stalls at a deviation range, so it didn't fail. And one of the things that I talk about in the training is that time. I have a whole section on time. I have a big section on time. And the high-level overview of that, and if we just go and look at that real quick, I talk about thinking in time, time in ranges, and time on momentum. The big thing about that is that the longer that something takes time to do something, time is one of the most important factors. Obviously, the biggest risk that there is. But in your trade system, you should have a factor of time. There should always be a time consideration, which is, and remember the low that I showed you earlier in this video, where it went and breached that low and it spent a minute at below those lows? Well, the fact that it spent a minute below those lows and the structure that it created there is one of those things that I look for, okay, this is bottoming behavior. This is a change in momentum type of behavior. There's a few times a week where you see that actually unfold. And that's where sometimes I go heavy because I recognize that, especially as multiple levels hold up, as multiple things hold up. But in this case, if you were short here, it's taking time to break this level, this key deviation level, and it's taking time to sell off. Obviously reducing the risk because you went short at, where did we go short here? I think we probably went short here and probably aligned with the break of the VWAP too, is probably where that short position aligned. Obviously you can move up your stop loss and just bring your stop loss either aligned with your entry. But you should also be wondering, why is it stalling here? Especially as you come off, and no, this is minor, but you're reading the story of the chart. And this will be the last example, so I'll end here. But the story of the chart is we have a sell-off, sell-off, sell-off. We have finally a decent-sized candle as a response that takes out all of this price action here. That's the way to look at it. It took out all this price action here. This candle took out all this price action here. Right here. So whatever happened here didn't matter anymore because this is the new price. Well, the longer that it stays at this level and just kind of stays there is telling you that, okay, well, maybe that's a change. Maybe this changed the short-term narrative, maybe whatever reason, however you want to explain it. The longer that it stays here is, it can just break down, and that happens, but it's also a greater risk. It's also where you maybe want to think, okay, maybe on the wrong side of this trade, maybe it's going to go back up and retest the VWAP, which it did. Go back and retest the momentum indicators. And maybe I got all out of this short trade that I could, because it's still a fade trade. If you just look at the multi-time frame RDA, you should not have any expectations of any big fade trades because you're stacked. Here's the 240 RDA, the 60, the RDA, the 30, the 50, and the 5. Back when you did this trade, it was still stacked. So really, you should have no expectations that any fade trade, which that was, is going to have a bigger payoff than typical. You should be looking for momentum trades. That's really where you should be looking. So hopefully that explains or I went into detail, I should say, with some high probability trades. Really, on Bitcoin, there was only two that were high probability trades. On FX, if we go to the Euro JPY, there was really only two. One was a hard, difficult fade trade, which I would say is not a high probability. And then another one was the actually RDA holding up. So if we go here. So there was this trade here, which is a high probability. There is a lower probability fade, more advanced trade here that existed. And then there was another high probability long. So there was really two long trades here. And in some ways, if you were in this trade still, this would have been an opportunity to add to the trade here. for then really which would have been your target, which is this level at a very minimum, this high, or not a minimum, but at a next target would be this high. That'd be your next target. Pretty good trades there. And then obviously we went through the NQ. The NQ, I don't know, we probably had what, 6 or 7 trades. And I'll end with this thought. In your trade system, you should know, now most people probably aren't like me trading multiple markets. You're probably just trading one market. But in your trade system, you should know how many trades on average your trade system gives you. If you're swing trading, you should know how many swing trades does it give me. If you're doing intraday trading and you're an always-in trader, like my system's really designed to reverse it, you could just be a long-only trader on my system. Or you could just be a short-only trade, meaning that you're only looking for short opportunities, and then you just trade the system that way. Or you're long. For instance, with Bitcoin, because I'm in the US, other than trading Bitcoin futures in the CME, I can't really trade on other platforms that offer Bitcoin futures. So for me, doing the short side, I'm not doing that a lot unless it's on the CME. Otherwise, I'm just looking for long swing trades. And I get about anywhere from 4 to 6 long swing trades a week in my system with Bitcoin. Sometimes as less as 3, but typically between 4 and 6. There's 4 and 6 swing long trades in the system. And I consider a swing trade in Bitcoin anywhere between 1 and 2%. That's what I consider a swing trade. Obviously more, I'm always looking for more, but anywhere between 1 and 2% for me is a swing trade in Bitcoin. And I'd even push that to the higher 2% level. So I'm typically not entering a trade on Bitcoin unless there's room for at least a 2% move. That's where I'm typically on my swing trades of Bitcoin. So if there's room for a 2% move, that's the type of Bitcoin trades that I do on the long side. So down below, you'll see links to the Discord. If you're interested in the membership and getting started with the training, it's real simple. It's $9.97. I take fiat and crypto. You get access to all training that I add. The full RexDog Trading System, as well as the private indicators, a lot of them that you've seen here. I break everything down that we've really covered here in a lot more detail. Other than that, subscribe or join Discord down below, and you can ask questions. We can continue the conversation there. I look forward to seeing you in the next video.